My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Hey everybody, welcome to my trading game plan. Of course, I'm Gareth Soloway here to deep dive into the markets on this Tuesday morning. And as always, verified investing is all about the charts and probability. No hype, no nonsense, no BS. All right, so yesterday we saw a down day on Wall Street. We kind of knew that was coming, right? We talked yesterday and last week about how institutional money was going to be back involved, and the markets had rallied 5 straight days during a holiday week of Thanksgiving before the institutional money came back to play. And so we did see that down day. It wasn't as bad as it could have been, likely because new money flow comes in at the beginning of the month from retail investors, 401ks, IRAs, etc. So let's jump into the charts and see where we are right now. S&P futures are grinding higher. This was yesterday's price action here. So you can see we opened sharply lower, rallied up, almost went green, and then into the end of the day, we came back in. Overnight, we were trailing down a little bit, and then really right around 3 a.m. And I think this is important, guys. We've seen this in the past. 3 a.m., like to the button, 3 a.m. buyers started to step in here, and the markets began to rally up. Now, the big level today on the S&P, we're going to be watching yesterday's highs, right? So yesterday's highs will act as a near-term resistance for today. We are not far away from that now. Let's watch and see. Do we get through those levels? Now, flipping over to the daily chart of the S&P 500, let's take a look. Number one, we know that on Friday of last week, we filled the gap. That brought in yesterday's drop. Now, you can see the bigger parallel that we've been talking about for quite some time. The bigger parallel is still fully intact. And the way I view it is very simple. Until we take out the high of that parallel, meaning we break above and confirm above that parallel, it is a parallel that I must, as a trader and investor, respect. Why? Well, because basically this parallel has marked every major market high and low for the last 5 years. I mean, think about that. A parallel channel that literally has predicted every high and low in the market over the last 5 years. And so if we look at the chart, who am I to say, oh, well, we're going to blow right through it right up here? Right? I have to just nature of common sense and logic, and that's what verified investing is all about, is just assume this is a major resistance, and even this could be a major pivot top here until it is proven otherwise. Now, listen, if it's proven otherwise, then you tip your cap to the market and you say, okay, well, where would be my upside target once that happens? But again, there's so many, we live in a world of social media and mainstream media where there's all these analysts and talking heads and everything predicting these crazy things. I mean, Bitcoin, think about the predictions on Bitcoin going into November, 250,000 by year end, right? And I just kind of scratched my head and said, okay, if that's the way they're going to view it, they're using emotion and hype to promote their target prices versus a technician which uses logic. What are the charts saying? AKA, what are the probabilities saying? And that's really the end all be all to me, because it's the only way I can win at a high percentage of the time. I'll never win 100% of the time, but at least using probability, essentially I become the casino versus the gambler. All right, so let's continue to watch this in the coming days. Does the market have more upside to retest this 6950, just under 7,000 level on the S&P? Or do we start to roll over? And then if we do roll over, basically what we're watching here, folks, is this low, right? So we have a very defined little area right here. If we were to take this out around 6550, 6543, you would expect a much bigger drop, which eventually I still think we head back to our highs from 2024. The QQQ, classic retrace after a breakdown of its parallel. And you can see, again, think about this, right? This was predicting all of these highs. I mean, here was a pullback. Over here, it kind of hugged the line. And then finally, it pulled back. Here it hit, pulled back, right? And then here it hit and pulled back, and then ultimately broke down. And what we saw here is a breakdown, a retrace, and then it's stalling here. And generally, if you looked at a ton of these parallels, right? If we draw another parallel down here and we just do this, generally what ends up happening in technical analysis with parallels or trend lines, you stay in them until you break, and then you retrace before you pull back, and you retrace to the scene of the crime right there, which was the former breakdown level. It was support over here. Once it breaks and confirms, it becomes resistance, and price tends to get rejected. At least that's what the probability favors, right? And that's, again, what it's all about. Probability, putting it in our favor. Essentially, as investors, we want to win more than we lose. We want to make educated decisions, not just guesses based on emotion, greed, or fear. All right, so let's move on here. So one of the reasons I think the markets are floating up a little bit today and not too anxious is simply this chart. This is the Japanese 10-year bond, or the 10-year yield, I should say. And what we can see is yesterday we had that big pop in the 10-year in Japan, and the markets did sell off. And today we're basically flat. There's no price action. And so anytime you take the foot off the proverbial gas pedal in terms of increasing fear, investors take a breath and they kind of look at the headlines, right? Okay, AI is still a big thing. Oh, we're hearing from analysts that valuations aren't so crazy, right? And these just reinforce that buy side mentality of buy the dip, buy the dip. It's worked since 2020. Heck, it's worked even longer than that, but really it's been most obvious since 2020 when we had that COVID dip during March of 2020, and then the reversal and new highs within a few months. Okay, so that kind of increases it. I'm going to continue to monitor the 10-year yield as my driving force of, in the near term, do markets go up or down? If the 10-year yield goes up further in Japan, then I would expect further downside. The dollar, after tagging resistance here, we've seen it pull back. You're basically just hovering between what we would refer to as a tightening wedge. It's going to take a while because this is, again, a longer term chart, but this flat top and this ascending trend line will slowly tighten the vice on the US dollar, and we're going to have either a breakout or a breakdown. My guess is we're talking probably in, you could be looking at first or second quarter of 2026 when we get that bigger break. The 10-year yield in the US is interesting. So again, we see this lower trend line here, also creating a wedge very similar to what we're witnessing on the US dollar, a flat top, horizontal top, a slow upsloping or ascending trend line down here. And we could see we came down sharply, we tagged it, and now we've bounced up, and the 10-year yield is continuing to bounce. And again, remember how wedge patterns work. So you have a flat top, we have an upsloping ascending trend line. Price is now stuck in between. The idea is as it gets tighter, it builds more and more pressure, and it either has a big breakout or a big breakdown. And so we've got to watch to see what ends up happening, right? Which way do we ultimately break on this chart setup on the 10-year yield? And again, this is important, right? Because number one, we're coming into a Fed decision in about a week and a half where the Fed will likely be cutting rates by 25 basis points. Again, interestingly enough, the yield has now surged the last 3 days, and we've been rallying up in front of that. Is that because they're going to be more hawkish? Is that more because, and this is what I think the move up in the yields in Japan is spooking bond markets globally, inclusive of the US, and we're seeing the yields here in the US go up. But isn't it interesting how the market on the 10-year, 20-year, and 30-year yield does not necessarily care what the Fed does? The Fed could lower rates another 3 times. If the global investing public, meaning the big players that are buying debt from the US, Japan, and other countries, if they're saying, nope, we won't buy it unless they raise interest rates, we demand a higher interest rate, the Fed could lower interest rates to 0, and the 10-year yield could actually still go up. Again, remember, the Fed controls the short end of the curve, not the long end. All right, just a heads up there. Okay, let's go into Apple. Apple is a big alert for me today. I've talked about this chart for the last month or so, saying, guys, be ready for Apple to go up to this major parallel. And look at this parallel, guys. I mean, this parallel goes back to the lows of COVID right here, connects through the lows of the bear market, then the liberation sell-off lows, and the highs here in the bull market of 2021, just before the collapse on tariffs and look at where we are right now. And so again, we look at this and we say, wow, look at what happened. At least we got a small sell-off on the S&P. Now, listen, it could be at the beginning of a bigger sell-off. We just don't know yet. But in the very least, we respect the chart. We can see that we've hit this, and each time we have a significant sell-off, the odds favor a pullback on Apple. So Apple becomes a sell today for me. Based on this, I will likely be shorting Apple as a swing trade position, looking for a pullback after it tagged the upper range of this parallel. So nice little setup there. Apple, again, has been kind of a recipient of money flow, right? So early in the year and really through the third quarter, Apple was lagging the mega players, right? The NVIDIAs, et cetera. But as we've seen NVIDIA pull back, Apple has received some of that money flow, partially due to the upgrade cycle for the iPhone being a little bit apparently more positive, and just sentiment, right? I mean, this is the way things and narratives flip, right? So Apple was an underperformer. And by the way, don't think that this isn't a coincidence. You see the narrative. So everyone was hating on Apple for a while, and then the narrative suddenly switches because institutional money has now positioned themselves long on Apple. And so now they have to get that narrative out on social media and in mainstream media that now Apple was a buy. And sure enough, Apple rallies up. But don't think that the narrative now won't flip back. And so just be aware on that. But I just want you guys to fully understand the way the market works. And that's honestly why I follow the charts, is because if you follow the narratives and the hype, you almost undoubtedly end up on the wrong side of the trade. All right. Speaking of which, this, my friends, we talked about MicroStrategy the last couple days. What type of candle formation is that based on technical analysis? It is a bottoming tail. So again, I don't know if Bitcoin has bottomed here in the near term. Maybe it has. We'll find out. It didn't take out the lows from about a week ago. But certainly on MicroStrategy's front, I'm looking for a near-term bounce. I've said that recently. And this candle is what we consider in technical analysis a reversal candle, a signal of a reversal high potential. And that's, again, a bottoming tail. You can look it up on the internet, what a bottoming tail is. That's it to a T. So in this realm, if we go to the 10-minute chart, you can see MicroStrategy's back to 177 already here after bottoming out at 155 yesterday. Great bounce. And again, we'll be looking for a move up. I still think MicroStrategy could get up as high as this area here, right around 225 to 230, which again would be about a $50 move from current levels. And again, that would only bring us back to the lows from March 2025, which is pretty incredible. All right, a big mover. Let's talk an earnings play. Listen, we're not in the midst of earnings, okay? But nonetheless, there are a few earnings here and there. Yesterday after the bell, MongoDB, a cloud player, reported, and they were pretty good results. All right, if we look at MongoDB here and we flip over to that chart, the stock is up about 23% on the day. Now, in terms of a day trade or a swing trade, we must flip to our bigger time frame. So I go from the 10-minute now to the daily chart. And if we zoom out here, this is where I start to get interested, right? Now, listen, this level's not that close. I mean, right now, MongoDB is trading around $410, $405 here. So it's trading right in this vicinity. But this is my level to watch, $445. Notice major high from 2021, bull market high, major high from 2024. And again, if we come up here, probability, look at what we've seen off of this, right? We've seen big falls. So you would assume if we hit that, we would have a pullback. Now, listen, I'm not going to tell you that I'm going to look for these type of pullbacks on MongoDB, but if it hits here, MDB, I would look for a day trade short today and potentially a swing trade pullback of up to 10% on a drawdown there. And again, maybe I'll buy the pullback at that point. We'll have to watch and see. All right, let's flip over to the metals. Silver yesterday blew through resistance levels. We saw it confirm. Today it is pulling back with gold, although the downside has already been somewhat mitigated. We've seen a bounce off of the overnight lows on the metal. So let's dive into the charts on gold here. Gold again is down slightly here. At one point, gold had sold back off to about 41.82. But again, it's holding here. Notice we talked about this high pivot yesterday. That again did turn out to be resistance. Now listen, you still confirmed a breakout above the wedge, which is net neutral to bullish. Now what we look for is if we pull back, does this level hold, and is it a springboard back to the all-time highs, right? Now, it doesn't have to pull back here, but this level now becomes excessive support. This should be a big level, all right? As a trader, you would assume that that level would hold until proven otherwise. Now, if it's proven otherwise, watch out below, because the biggest moves come from failed move. That's something I learned very early on in my trading career. You may have the best bullish setup and it might start to play out, but if it fails, watch out below, because it can really dump out. Now, right now, it's holding. We respect it, just like on the short side, we respect the S&P at that level as a pullback zone until proven otherwise. Here in the reverse, we broke out, we confirmed, pulled back here a little bit today. If it comes into here, we respect that as major support and assume it will bounce higher and go higher unless it breaks, in which case you exit very quickly and you flip it around. You can flip it around to the short side of the trade. But again, I'll keep you guys posted on gold and silver. Silver here, which again, look at this overnight, folks. This is pretty remarkable. So silver had this big sell-off on the 10-minute chart overnight. Now it's starting to rally sharply into the opening bell here. It's still not at its highs, but look at this, guys. To me, this is where I'm looking as a major resistance level. Look at these levels here. You have your up sloping or ascending trend line right through here. We drag that classic parallel. So easy to do, by the way. So easy for all of us to draw these in. We bring it up to this high here. And again, that dictates that around $60 on silver on this chart, this CFD's chart, that would be major resistance there. All right, now, one of the things, and by the way, we'll get into, actually, let's get into oil first and natural gas. I want to show you something about Bitcoin. We'll talk about Bitcoin and the crypto markets. Okay, so here's oil, right? Now oil continues to hover inside of this consolidation zone here. So again, nice consolidation zone in here. And again, we just tagged the high end of the parallel. It's rejecting it. Remember, this is a net, even though it's still stuck within its parallel, and we must respect this, the bigger pattern remains bullish, even though it's more like a ladle now. Instead of a cup and handle, we'll call this a ladle. Again, generally, this pattern will break out to the upside on oil. So I continue to be bullish on this. I continue to hold my long, which I picked up on oil right down here via the ETF USO. And again, we'll watch to see what happens. And then lastly, natural gas. And then I want to get into crypto, because I'm going to show you something amazing on crypto, guys, in relation to the stock market. But in terms of natural gas still looks okay here. Like, if you look at this chop, it's really, this is the weekly chart, by the way, but it's really just consolidating. This is bullish consolidation at this former high pivot. I still think you have one more move up to $5.30 on natural gas. Then I'll look to short this chart setup. Looks very good at that point. All right. Now, we're going to take a look at Bitcoin, right? And we'll take a look at Bitcoin, but I want to show you how Bitcoin dictates the S&P potential top. Okay, and this is something fascinating. I've paid attention to it since 2021, and ultimately, it may signal that the S&P is not only at a top here, but getting ready for a bigger market correction. Let's take a look here. So let's first look at Bitcoin, right? So if we look at the Bitcoin chart, we can see again, Bitcoin on the daily chart is getting a good bounce after yesterday's nasty decline. Also, one of the reasons why MicroStrategy is bouncing here. All right, so number one, I still think, again, you could be in a chopping zone. My guess on this chart on Bitcoin is we probably continue in this sort of sideways consolidation zone, which means we could get back to about $100 on Bitcoin. Once that happens, I remain bearish for a move down towards 70, basically 70 to 74, 69 to 74, right down here. You can see, again, this level goes all the way back to the bull market high of 2021. And again, through the highs and the lows right there. All right, now, what I want to show you is this. If we flip over to this chart, this is the chart of Bitcoin's bull market high in 2017, okay? In 2017, we saw on December 17th, a high on the S&P, on Bitcoin. If we look over here on January 26th is when we got our high in 2018, right? So January 26th, 2018. Okay. So again, just take note of this. This was about 5 weeks. This high occurred and Bitcoin topped out for its bull market. And then 5 weeks later, here, the stock market topped out and really had a pretty dramatic correction. So 5 weeks, remember that. Then we flip over to this chart. Here in 2021, on November 10th, Bitcoin topped before its bear market, right? And we knew it pulled all the way back to 17,000 from 69,000. On January 4th, about 6 weeks later, all right, January 4th, 2022, we saw the S&P top out for its bull market. And so what we're seeing here is a theme that approximately 4 to 6 weeks after a Bitcoin top and the beginnings of the Bitcoin correction, the S&P begins to top out, right? It tops out, it starts its decline. And the reason I'm bringing this to your attention is, number one, it tells us that Bitcoin is a great leading indicator potentially that we should pay attention to, but also it tells us that there's de-risking in the highest risk assets like crypto first before it influences the stock market. Now, if we go to our current period, on October 6th, 2025, Bitcoin topped out. And then on October 29th, so this one was only 3 weeks later. So it's a little bit of a shorter period, but notice again, the stock market topped out, we fell, now we're bouncing. But again, let's watch and see, does this turn out to be a major top? And did Bitcoin ultimately predict it? All right. So again, you guys see where I'm going with this is that you can use Bitcoin. And listen, if Bitcoin pulls back 5%, we don't say, oh, there's a top on Bitcoin, so the stock market. You have to look for these bigger pullbacks, right? So the Bitcoin has fallen about 30% off of its highs. That's significant for Bitcoin now. And so those are the types of tops that you start to pay attention. And listen, there's no pure answer. It's no 100%. But as a technician, my brain scans for these type of similarities, these type of coincidences that maybe aren't coincidences, right? Where it actually aligns and there's some predictive power. Because if you can find those, you have an edge in the market. And an edge in the markets ends up meaning thousands, hundreds of thousands, millions in profits potentially for us as investors. All right. I got to get going, guys. I didn't get to answer questions today. I will look at them tomorrow and we'll try to get through some questions. You guys are amazing. Thank you so much for tuning into the game plan. I'll see you tomorrow. Take care.